Hello and good afternoon to everyone that is currently tuned in live with us on another episode of Phillip Trading Podcast. I'm your host for today and my name is Trent. So with me here today is my colleague William, a senior dealer and marketing executive from Phillip Futures. How are you today, William?
Very good. Thank you, Trent. Nice to see you.
Okay, welcome back. So for today's podcast, we will be discussing on topic is US indices currently trading at strong support level. Okay, so to our audience out there who are currently trading US index futures and or are interested to trade US index futures, do not miss out on this podcast. Okay, once again, I would like the help of all our beloved audience today to share this video to all your friends. The more people that are watching this video, the more we are motivated to deliver greater content to all of you. So without further ado, let's jump into our topic for today. Is US indices currently trading at strong support level? So the US indices have been moving in downtrend since September after hitting its historical high. So William, as the US Congress had recently passed a short-term increase in US debt ceiling, what are your views on the potential effect on the US stock indices?
Okay, so I think that this particular news that the Congress agreed to increase the US debt ceiling temporarily until December, I think this is a very bullish news for the equities market. So in the short term, I would say the liquidity in the market is currently sufficient to support the equities market. So if we look at the equities market from a bigger picture, okay, the entire market in a bigger picture, there is no way for US Congress not to pass the debt ceiling because that will lead to a catastrophic consequences. Okay, will you want your country credibility to bankrupt? I don't think so, right? So as long as the Congress will continue to increase the debt ceiling, I reckon that in the next 6 to 12 months, we will still see the bullish momentum going on in the US stock indexes market. Yeah.
Okay, so let's see how the US indices will perform in the coming weeks. Okay, so for our next question, given the increased likelihood of a potential tapering by mid-November due to higher inflation, how will the event affect your opinion on the direction of the US stock indices?
Okay, so in my opinion, the US indexes has already factored in the tapering news. Okay, so I think Fed has been very clear on the timeline of the tapering already. The likelihood for US to see tapering after FOMC meeting in November, I think the chances are more than 70%. So US indexes have been moving in downtrend since the early September due to two main reasons. The first one is definitely the tapering, and the second one is the US debt ceiling issue. Okay, so the downtrend since early September, in my opinion, is a digestion of all these news, which means that the market has accepted the fact that tapering is going to happen at the end of the year. So I reckon that the negative impact on US indexes when tapering truly happens will be quite minimal. That is my opinion. Yeah.
Yes, indeed, the market may have factored in the tapering. Okay, so what are the key levels that investors should monitor in the four major US stock indices, which is the S&P 500, Dow Jones, Nasdaq, and Russell?
Okay, so I personally think US indexes has definitely rebound slightly from its rock bottom now. Okay, but still, I think it is currently at a very good level to participate the long position because it has finally do a lower high kind of setup. So for Dow Jones, my opinion is that any level between 34,800 to 34,900 could be a very good places to do long. For S&P, I reckon 4,004 could be a level to monitor closely. Okay, Nasdaq 1,005, a psychology level, a strong support. It's also a breakout level. It's definitely a level to watch out. And also it has breakout from its higher low setup, like I mentioned just now. That is where we want to start to do long, not at the rock bottom. Okay, and for Russell, I think the current level 2280 is a great price to participate because it has been moving in a sideways for I think over the entire year. So yeah, always remember, like I said, we do not want to participate a long position at the rock bottom because a low can go lower, but a lower high setup, which means could mean that the trend is starting to turn upwards. So as long as you're able to find a good risk to reward ratio set out through that higher low, then it's good to participate a long position already. Yeah, that is my opinion.
Okay, thanks. So let's see how each of the US index perform at the price level that you have mentioned. So for our next question, for a new investor that had just started to trade the US stock index futures, what is your advice on basic fundamental analysis in the current market condition?
For new investors that want to understand the fundamental of US indexes, I would say first you need to list out all the economic events that will affect the market. So after you list out the events, try to take note on the date. Okay, so on the announcement date and time, try to monitor the live market reaction. Okay, upon the announcement, so that you can understand the full correlation between the data announcement versus the movement of the US indexes. So try to monitor the live price movement and the correlation. So there are a few fundamental indicators that I normally look at. The first one is definitely the 10 years treasury bond yield, because that determines whether if you should long Dow Jones or you should long NASDAQ. Because a high treasury yield usually is more beneficial for Dow Jones, okay? A lower one would be more beneficial for NASDAQ. So that gives you an idea. And the second one is definitely the non-farm payroll and also the unemployment rate. So these two indicators are actually a very important indicators for Fed to watch out to determine whether the tapering is going to happen or whether the interest rate hike is going to happen. And lastly, is definitely the CPI and PPI. So CPI is the consumer price index, PPI is the producer price index. So these two basically is to judge the economic activities in the market, because consumer price index, if it is higher, means the consumer has more buying power, they purchase more, hence a higher index. And producer price index, if they produce more, then a higher producer price index. So that is like a judgment in between whether the economy is good or bad. So all these actually is part of the fundamental analysis on US indexes.
Okay, thanks, William, for your sharing, and I hope it will help the new investors out there. And to our audience who are interested to trade the US indices, you can now trade CME Micro US Index Futures with Phillip Futures, as its margin is 10 times smaller than the E-mini US index contracts. Investors with smaller capital can now participate in the US index market. Not just that, we are also one of the broker in Malaysia that offers the lowest commission in CME Micro Futures. For more details, you can drop us a message on Facebook and our representative will get back to you. Okay, and now we have come to an end for today's podcast. If you have any questions or any topics that you want us to discuss next week, you can drop us a message in the comment box below. Thank you for listening to our podcast and happy trading for the week. Thank you for your time today, William.
Okay, thank you. Thank you, Trent. See you next time.
Bye.
Bye-bye.